Meta loses $200 billion in value as Zuckerberg focuses earnings call on all the ways company bleeds cash. During Zuckerberg's earnings call, Meta loses $200 billion in value because of all the ways the company loses money. Mark Zuckerberg discussed artificial intelligence at the beginning of Meta's earnings call. He then went into the metaverse and talked about the headsets, glasses, and operating system that his company made. He spent practically the sum of his introductory statements zeroed in on the numerous ways Meta loses cash. It didn't appeal to investors. In extended trading on Wednesday, Meta shares fell as much as 19%, erasing a market cap of more than $200 billion. Despite Meta reporting revenue and profit for the first quarter that were higher than anticipated, the decline occurred. Zuckerberg seemed prepared for the sale. "I believe worth getting down on, that we've generally seen a ton of unpredictability in our stock during this period of our item playbook where we're putting resources into scaling another item however aren't yet adapting it," Zuckerberg said. He mentioned prior endeavors like the move to mobile and the short video service Reels, Stories. Meta produces 98% of its income from computerized publicizing. But when Zuckerberg talked about ads, he was thinking about the future and how the company might turn its investments into ad revenue. He stated, "There are several ways to build a massive business here, including scaling business messaging, introducing ads or paid content into AI interactions." When discussing Meta's endeavor to construct a leading AI, he invested energy discussing Meta Llama 3, the organization's most current huge language model, and the new rollout of Meta Artificial Intelligence, the organization's solution to OpenAI's ChatGPT. Zuckerberg then, at that point, moved on to possible open doors for extension inside the blended reality headset market, similar to a headset for work or wellness. Meta opened up admittance to the working framework that powers its Mission headsets on Monday, which Zuckerberg said will assist the blended reality biological system in with becoming quicker. Additionally, he extolled Meta's augmented reality glasses, describing them as the ideal device for an AI assistant because you can let them see what you see and hear what you hear. Meanwhile, Meta's Existence Labs unit, which houses the organization's equipment and programming for advancement of the beginning metaverse, keeps on losing money hand over fist. Reality Labs revealed deals of $440 million for the first quarter and $3.85 billion in quite a while. Since the end of 2020, the division has suffered losses totaling more than $45 billion. Zuckerberg has purchased some time for himself. Meta's stock cost nearly significantly increased last year and, as of Wednesday's nearby, was up 40% in 2024. It arrived at a record $527.34 toward the beginning of April. Zuckerberg appears to have regained the confidence of Wall Street following a brutal 2022 in which the company lost approximately two-thirds of its value. The rally has been fueled by a cost-cutting strategy that the CEO of Meta implemented at the beginning of the previous year, when he promised investors that 2023 would be the year of efficiency. In an effort to become a stronger and more nimble organization, the company reduced its workforce and eliminated unnecessary projects. Zuckerberg said Wednesday that Meta will keep on working productively, however that moving existing assets to interests in computer-based intelligence will develop our speculation envelope definitively. Capital uses for 2024 are expected to be in the $35 billion to $40 billion territory, an increment from an earlier estimate of $30 billion to $37 billion as we keep on speeding up our framework speculations to help our man-made consciousness, simulated intelligence, guide, Meta said. Before Meta's AI products can become profitable services, Zuckerberg predicted a multi-year investment cycle, but the company has a strong track record in this area. Meta finance boss Susan Lee repeated Zuckerberg's comments, saying the organization needs to foster high-level models and scale items before they will drive significant income. Lee stated, "We're just much earlier on the return curve, despite the fact that there is tremendous long-term potential." Indeed, even before the call started, financial backers were managing their property. This is due to Meta's light revenue forecast for the second quarter, which overshadowed the beat for the first quarter. As the stock dive escalated, Zuckerberg let financial backers know that assuming that they're willing to join the party, they likely could be compensated. According to Zuckerberg's statement, historically, investing to build these new scaled experiences in our apps has been a very good long-term investment for us and for investors who stuck with us, and the initial signs are quite positive here too. Be that as it may, building a main man-made intelligence will likewise be a bigger endeavor than different encounters we've added to our applications, and this is possible going to require quite a long while.